to do to find out what the specific price data is around this setup is click on the Signals tab. Okay, so here we've got the actual trade instructions associated with that alert. Here you've got the date and time, strategy name, propulsion method, currency pair, euro, US dollar. This is a buy at 1.3025 stop. The initial stop price, 1.2972. And with the Forex profit multiplier methods, we're exiting the trades by scaling out profitably in 2 steps. The first is to exit, in this case, at 1.3058. That's first half position. And if the market continues to run, the second half at 1.3089. And then you can see here further instruction. This is all in accordance with the trading method rules that you're going to learn. When the first profit target is hit, when this profit target is hit right here, we change the stop to break even to 3025 on that remaining half position. So the worst that can happen is you break even. This is what I call a free trade. This is our free trade strategy where you zero out all the risk in the trade as soon as possible. Now, a common mistake a lot of traders make, especially beginners, is they set the initial stop too tight. You see here we've got enough room between the entry price and the stop so that if the market wants to move around a bit before heading in the expected direction, it can do that without stopping us out prematurely. But we're very impatient. I mean, we give it some room initially, but as soon as it starts to move in the favor of the trade, we're going to move that stop up to break even, zeroing out all of the risk in the trade. This is just a terrific way to trade and control risk. Okay, so you got your Forex profit multiplier trade alert software running on your computer. You get an alert. You come to the Signal tab here. Here are the order instructions. You go to your broker's trading platform and you just enter the order information. Here it is. And I tell you what, I don't think anything could be simpler than that. And the great news, too, is you're not just blindly entering this order. You're going to understand from a careful review of the course material why this setup occurred. That's very important because I don't want you just loading orders in, not knowing what you're doing or not knowing the rationale behind the trade. That's not the right way to trade. So when you combine the two, the understanding of the methods with this trade alert software, I think you got an unbeatable combination. Okay, let's bring up the charts page again and look at a couple more of these examples. You scroll up here so that you can see this. Okay, let's look at the U.S. Canadian dollar pair. Here we had 2 setups that occurred in close proximity to one another, both short. To go short here, you can see the market action. Okay, now let's go to the Signal page to see what the specific order instructions are for these 2 alerts. Of course, these are going to be occurring over here at the hard right edge in real time. And so you'll see that buy or sell icon pop up, and then you just go to the Signal page to get those order instructions. Okay, here's the Signal page. Here's the first trade that you saw on the chart alerted. Propulsion method, US CAD, sell at 10307 on a stop. Initial stop 10375. First profit target, second profit target. Again, when first profit target hit, change the stop to break even. Zeroing out the risk in the trade, free trade status. Likewise, on the second alert, that was to sell at 10265 on a stop. Here's the initial stop. Scaling out in 2 steps. Here are the prices. And again, change the stop to break even on that remaining half position. Zeroing out the risk in the trade. Doesn't that sound good? Now, not every trade's going to hit the first profit target, But we're going to show you how to tighten up the stop further with trailing stops, whether it does or not, so that we're always relentlessly reducing the risk in the trade. That's very, very important. Okay, let's check out the Australian US dollar alert right here to buy, and you can see how the market moved up here, and we'll come back to these markets in a moment. Okay, on the signal page then, here's the date and time. In this case, it's an impulse method setup, Australian US dollar to buy at 91.71 on a stop. Here's the initial stop, first profit target, second profit target. And again, when first profit target is hit, change the stop to the entry price on the remaining half position, a free trade situation. Again, we give the trade a little room initially, but then we tighten up that stop very quickly. Okay, let's look at these charts in a little bit more detail. Okay, now I'm going to go through a bar-by-bar trade dissection on these examples. Here is our alert right here. This is the setup bar. That means the conditions are ripe to get long in the market in this case. This is a buy. Now there's two parts to every entry. One is the setup and the other is the trigger. Not every setup will trigger, and that's by design, because remember, we only want to get involved if the market is moving as we expect. And so here's the setup. The trigger is to get long in accordance with the order instructions and the trade rules right in here on the next bar. So you're going to get long right in that area right there. And the initial stop in this case is going to be somewhere right around in here. I'm just sketching this in as best I can. And again, I want to give it a little room here initially, so I don't want to get it stopped out prematurely. And then we're going to, at the same time as we enter the trade, load in the first profit target, which is right around in here, as a matter of fact, on this one. Predetermined levels, and we're going to show you exactly how to do that. And then as soon as the market hits that first profit target, this stop's going to move all the way up to break even. So at the close of this bar, the profit target's been hit on the first half position. You move the stop all the way up to break even. That zeroes out the risk. Zero risk. And what this does is it dramatically changes the reward to risk ratio in your favor when you do this. This is a way to do it, because you never know how far the market's going to run. It might stop right here and then just, trade down and stop out. It might trade on down a lot. And if you didn't have this moved up to break even, you get stopped out on the second half position with an unnecessary loss. Okay, if it wants to continue to run like it did here, as each bar went by, we've got a resting order in here for profit target 2. Here's profit target 1, profit target 2. Okay, well, the market stalled out here, but then it had another move up and took out that second profit target for even more profit. In this case, 31 pips on the first profit target and 62 pips on the second. Very nice trade. Now, a lot of these trades are profitable, and indeed, Forex Profit Multiplier was designed specifically to have a relatively high percentage of winners, because so many traders just, don't have the discipline to stay with a method unless that's the case. And so that's why we're going after quick hit moves here and taking very nice profits out again and again. Now, every trade obviously is not going to be a winner. That's impossible. That doesn't exist. Don't let anybody kid you. And you experienced traders, of course, know that. And that's why we have to pay so much attention to risk, first and foremost. And that's why we emphasize that over and over and over again. Let's look at another example.